When it comes to making an investment decision, we think there are 4 very basic questions every investor needs to ask themselves and answer before investing $1. Let's cover those basic questions in this latest edition of LPL Street View. The practice of investing doesn't have to be that hard, and some of the most successful investors of recent decades often take fairly simplistic approaches and apply them consistently over time. Today, we wanted to put a common sense investing approach into the form of 4 very simple questions. Those questions start with what, why, when, and when. Simple enough. Now let's walk through the questions in more detail. Number 1, what is the investment? Before investing $1, you need to know and understand some fundamental and/or technical details about where you are putting your money. Hearing about an investment at a cocktail party or over some stream of media, simply not good enough. You or your advisor need to apply some level of background research before you put your money to work. Number 2, why am I making the investment? Asked another way, what's the goal? Is it an investment for retirement? Is it for education expenses? Is the goal to make a short-term profit in a fast action trade? The implication here is to make sure you understand the purpose for your investment. Having the purpose in back of your mind may reduce the chances for investment mistakes later on. Number 3, when should I buy? This question speaks in part to question number 2 and has to do with the entry price of your investment. If you're making a long-term investment and your goal is retirement, entry price may matter less. You may feel less compelled to put all your money to work today, but rather average in over time. If you are making a short-term trade, well, then entry price becomes critical. Keep that in mind. And finally, number 4, when should I sell? This question has everything to do with your time horizon. For example, if you are investing for retirement and you commit to your time horizon, you may be less likely to be scared out of the position in a bad market. That is, as long as the criteria for the investment has not sustainably changed. Conversely, if you are making a short-term investment and price goes against you, you may seek to take those losses and live to fight another day. The bottom line, have a sell strategy before making an investment. Those are the 4 questions investors should ask and answer. What is the investment? Why am I making the investment? When should I buy? And when should I sell? We believe stepping through those basic questions before putting your money to work may in fact lead to better investment outcomes. Thanks for listening, and as always, allocate wisely.